Let's bring in Dan Ives, Managing Director of Equity Research at Wedbush Securities. Peter Rojas also joins us, partner at BetaWorks Ventures and former editor of Engadget, and CNBC senior markets commentator Mike Santoli. All of the experts here on Apple. Dan, what's moving the stock right now?
Look, I mean, it's really about the overall upgrade cycle. Because if you look today, I mean, this is the drum roll to the main event in terms of iPhone 12 super cycle. But just take a step back. I mean, the watch, only 10% of Apple customers in our estimates have Apple Watch. We think that could be 25% in the next 3 years. And a massive upgrade cycle that's happening across really the hardware as well as even on the AirPod side. That speaks to the re-rating and what I believe is just a drum roll to the main event in the next few weeks, which I view as a once-in-a-decade upgrade cycle for Apple.
What stood out to you, Peter, in terms of innovations?
Yeah, I mean, I think that, the things that we saw from the Apple Watch were not necessarily groundbreaking, but it shows that they've really settled on health and fitness as the key product features for the watch. When they launched it a few years back, it wasn't clear whether this was going to be a new ecosystem for app developers. That really hasn't turned out to be the case. It's really all about fitness and health. And you can see with the fact that they're focusing on new features like oxygen level monitoring, that they're trying to turn the Apple Watch into something that people use as a way to not just live a healthier lifestyle, but to really, save themselves from, when they're in, health-threatening situations. Tim Cook began the presentation by giving examples of how the Apple Watch had saved people's lives, people who had a cardiac incident and things like that.
Josh Lipton, do you think they've got brand value, brand image in fitness, though? I mean, you can see that pivot that they did before from music into streaming TV shows and movies. That was an obvious step, but they're a long way from having the kind of brand value of a Peloton, for example.
Well, they have pushed, though. It's an interesting point you're making, Wolf. But, you look at the Apple Watch. I mean, that has been positioned for years now as a pure, health and fitness product. Clearly, you listen to Tim Cook and Jeff Williams. They were hitting that hard again today. And that has resonated. I mean, you look at that smartwatch business. Analysts estimate they now dominate globally about 50% of the smartwatch market. And just to put that in perspective, number 2 is Samsung at around 10%. So they have been hammering themselves home there to consumers as a health and fitness play. At least with the watch, it's worked. Let's see how that translates to the new service as well.
Mike, as far as investors are concerned with the stock, which has had such a tremendous run-up so far this year, is it what Dan said? It's all a drum roll to the next iPhone launch, which is delayed and we didn't get today. Was there anything notable in terms of revenue drivers or stock drivers out of today's announcements?
Nothing that I think is going to cause kind of instant revisions to people's outlook. I don't think there's really even any specific disappointment with what's happening today, even though the stock did back off a little bit. It's mostly about the setup. As we know, the stock's more than doubled off the March low. It had this tremendous run even after backing off in the last couple of weeks. And I think everything is in the context of all of these mega cap stocks, and none more than Apple, have been just revalued according to this idea that they're going to have years and years of growing cash flows. And this announcement today certainly doesn't do anything to detract from that, probably reinforces the general idea that they're trying to make their products more indispensable and make it more of a coherent ecosystem. But the one thing I would say is the story has now become very well absorbed that it's about services and ecosystem and kind of annuity-like revenues. That's what's in a 30 times multiple for Apple shares right now. Therefore, the bump from hardware launches and from this idea that you're going to get a new big hit every couple of years maybe is going to be diminished. And it's been good for investors so far, but it might change how these events get received.
That said, of course, Dan Ives, clearly the focus today is on hardware, but not necessarily the typical piece of hardware, the iPhone that we've always focused on for most of the last decade. What portion of your valuation for Apple is still the iPhone versus, say, a year ago?
Yeah, I think, look, as Mike hit on, that's been a big part of the re-rating on services. I mean, we think the services business is worth $9 to $950 billion. But when you look at the core sort of hardware and the iPhone, the iconic hearts and lungs, that's still $1.5 trillion valuation. So that continues to be the story. It's all monetization going forward. But I think a big part of the re-rating and numbers moving higher is the 1-2 punch. And it all starts with the super cycle, which we continue to believe is going to be a game changer for Cupertino.